Howdy out there, folks. It's Darius Dale here to present our macro minute for Wednesday, April 27, 2022. Starting with the markets, we got stocks up, commodities up, crypto up, dollar up, global bond yields up, a little bit of a reflation bounce off the deflation we have seen week to date. From a market moving headline perspective, you have Chinese stocks. They rebounded from a 2-year low after President Xi Jinping committed yesterday to boost infrastructure spending in all the lockdown cities. So we're going to see how that works out. Anyway, we spent a decent amount of time in yesterday's leadoff morning note, arraying all the range of probable outcomes as it relates to Chinese stimulus, what we've seen thus far, what we're likely to see coming down the pike, and the key takeaway is right there in the notes. So go check that out. Gazprom, Russia's largest sort of nat gas company and our bank, they halted gas flows to Poland and Bulgaria and said supplies will remain turned off until they agree to pay for Russian gas in rubles. So now EU members must decide whether to set the terms before next wave of payments is due in the middle of next month on May 15th. So you already have some people throwing in the towel. Some are paying for rubles. Some firms have opened up accounts at Gazprom to meet the requirement. But at the end of the day, Ursula von der Leyen, she's the president of the EU Council, she effectively called it shut off blackmail. So they're going to start voting on whether or not to proceed with Russia's demands or whether or not to sort of incrementally shift towards the West for incremental gas supplies. I think we all know what the answer to that is. If they opt for that, that's a much sharper slowdown in the European economy, because right now the ease of getting gas from the United States to Germany and Poland and Bulgaria is simply not the same as it is from Russia. Anyway, shifting gears a bit, the NSC NYSE FANG Plus Index down 20% April to date. Holy hell. We're still early in this process. I hope everyone realizes that. Up next, we got Meta reporting tonight. What a stupid name. And then you also have Qualcomm. Both companies have some issues in terms of their operating structure that they're likely to report. So we'll see what the market response to that. Maybe it's priced in already at this point. But one thing we'll talk about is sort of where we are in the broader earnings cycle in today's leadoff morning note. And then I thought this was a sign of the times. You get Robinhood. They're cutting 9% of their full-time staff after its quote-unquote hyper-growth cooled. I think that's a sign of the times. I mean, this is the company that brought so many of you into the traditional finance space, into the options market, et cetera, et cetera. If their growth is slowing fast enough to cut nearly 10% of their staff, I think it's a sign of underlying weakness as it relates to a lot of the flows that have supported asset markets in this sort of post-crisis, post-pandemic era. Big movers this morning. Obviously, China's up on the Xi Jinping commitment, up 2.5% to down 4.2% week to date. The Bloomberg Industrial Metals Index up 1.2% to minus 2.2% week to date. And then I thought this was a pretty important move. You have 5-year forward inflation swap rate. So that's what the inflation is likely to average in the 5 years going from 2027 to 2032. That up jumped 9 basis points to 2.83%. So that's either a signal that the Fed's going to tolerate a little bit more inflation, or what we just heard from President Xi Jinping is being interpreted as real from the inflation swap market here in the U.S. So we'll continue to monitor that as it relates to where bond prices are headed, what the Fed's policy response to some of these incremental inflation signals might be. Shifting gears to the charts here, the U.S. dollar remains bullish from the perspective of our volatility adjusted momentum signal. It is now overbought with 2.3% downside to the lower boundary of its probable range. Gold neutral VAMS, it is oversold with 5% upside into the upper boundary of its probable range. So good snapshot there. On slide 5 here, 10-year Treasury yield still bullish VAMS. You got minus 8 basis points of downside versus 38 basis points of upside to the upper boundary of its probable range. High yield OES, that is also overbought with 59 basis points of downside to the lower boundary of its probable range. Neutral VAMS still. S&P 500 broke down the bearish VAMS, and what that did is create a negative skew in the probable range distribution, so not quite as oversold as it was minus 2.4% of downside versus 6.4% of upside to the upper boundary in its probable range. VIX is still neutral VAMS, minus 43% of downside to the lower boundary of its probable range. So pretty obvious setup here from a short-term risk management perspective, but obviously the medium-term outlook remains incredibly bearish. On slide 7 here, NASDAQ still bearish VAMS, minus 3.9% of downside versus 9.1% of upside. Russell 2000 neutral VAMS, minus 0.8% of downside versus 9.5% of upside. Bitcoin and Ethereum both still bearish VAMS. It was a great sell by us back in early April. So sort of bearish VAMS I mentioned. minus 9% of downside versus 7% of upside. So somewhat of a fair fight in Bitcoin there. Very much of a fair fight in Ethereum, 9% of downside versus 9% of upside. And its probable range. Shanghai Composite, China bearish fams. I mean, we're going to get a massive infrastructure bill. Look at that, folks. Look at that massive infrastructure bill get priced in. Look at all that massive stimulus getting priced in. Look at all the measures to support Chinese stocks getting priced in. Look at, oh my God, the PBOC is easing getting priced in. How many times are we going to go through this day in 2022? Until you see the whites of the eyes on Beijing handing out money, easing monetary policy, put your earmuffs on, because obviously the rhetoric is coming out of Beijing has really not been helpful. But anyway, in terms of policy, in terms of the VAMs and probable range process, 90 basis points of downside versus 8.1% of upside. Obviously, still bearish VAMs hit a 2-year low. WTI crude oil neutral VAM still minus 10% of downside versus 9% of upside. So kind of hanging in there. I mean, this doesn't look like a chart of the Nasdaq or the S&P 500. So it's telling you, as we said, going back to I want to say February, I said this, to our Around the Horn subscribers and all of our 42 micro subscribers, I think the outlook for commodities is better than the outlook for stocks from this point forward. And therefore, we're going to reduce our equity allocations and take up our stock allocations while broadly reducing the amount of overall exposure we have to the equity, commodity, and crypto space, which is why we have such a large cash position. That's feeling fantastic week to date. On slide and shifting gears to ag here, neutral VAMs. Minus 3.6% of downside versus 2.1% of upside. Still raging bull market. Industrial metals and neutral VAMs there, minus 1.6% of downside versus 6.1% of upside. So with that, Darius Dale presenting our macro minute for Wednesday, April 27, 2022. Best of luck out there this week. And oh, by the way, I'm going to be offline Thursday and Friday of this week. So we'll catch you back here on this program Monday morning, 42 macro subscribers. Catch you on Saturday for the Around the Horn. We'll get it out a little bit later than normal because I'll be actually traveling that day, that morning. So catch you back here. Cheers, everyone.